We just built ourselves software to manage our own stuff. And then it evolved into this monster. And this is crazy. This is a story I love telling because I was blown away that this even exists. The ability to pull data from everywhere, create that single source of truth. Because if you don't have that data, you can't really make great decisions. People will spend hours, days finding the best flight, the best hotel rate,
Mm.
save a few $1,000s, but they won't spend the same amount of time understanding where they should invest their money.
Welcome back, investor, to another episode of Passive Income Adventures. My name is Emma Powell. If you are new, this is a show where we talk about all things investing, business, passive cash flow, how to invest, design your lifestyle, basically living the life that everybody wants, and we help you figure out how to pay for it. So today our guest is Latanya Yahav. Thank you for coming in.
Thanks for having me. And you said my name perfectly.
I always feel like I'm mispronouncing sometimes names on a podcast because you see it written out and you've never heard it, but glad to hear that that was correct. So hold on just a second. So Latan, you are with Visor.co, and we've been dabbling around with Visor for probably the past 5 years as a way to manage our private portfolio because our public stuff is on Robinhood, M1, whatever people are using, Fidelity. And I noticed that as we were getting more private investments, we were spreadsheeting it and almost like investing more than we felt comfortable investing into a single deal just to keep the management easier to look at. And so when I first met you, I thought, oh, great. Let's have you walk us through what Visor does, how it can help people with complex financial situations. Because if you get into private markets, it's going to complexify. I think it's worth it, but it definitely takes some management. Start us out with your background, like where you started, why you ended up in this field, build your credibility. Tell us why you can talk to us about private market management, complex financial situations, and then we can dive a little bit more into the features of what your platform does.
Yeah, I appreciate having me on the show, and I love talking about private investing, passive investing, and all the things around that. We built Visor, and I'll start from the end and go back to the beginning. We built Visor for us. Like, we did not think this is going to be a company. We just built ourselves software to manage our own stuff, and then it evolved into this monster. So I'll go back, I don't know, 20 years. So I'm from Israel, served in the Israeli Navy for 6 years. My co-founder also Air Force 6 years. Like, we're military guys. We started our last company in 2012 in a crazy industry. So we built technology for the diamond industry. So
Mm.
photographing and displaying diamonds in 3D, very different than wealth management, financial, and all this world that we're in, very different. But we scaled that business and became a standard for diamond photography and imagery around the world, and sold that company back in 2015 and encountered our first windfall or liquidation event. And at that point, we made some money, not tens of millions, but enough for us to just start to deploy capital. And in Israel, it's very common for people to know a guy who does real estate abroad. Writing $50,000 checks to a real estate deal you've never seen before was very common, as opposed to the US, where if you're not in the circles, they don't even know that this even exists
Yeah.
outside S&P 500, right? And so we just started to write relatively small checks, but to a lot of different operators, learning who to trust, how to go over these deals, how to look at pro formas and business plans and PPMs and all that stuff. And over the years, started to deploy 50,000 checks to a lot of these different deals, reaching a point where 5.5 years ago, we're like, I get an email from a GP, like a fund you invest with, right? And I'm like, damn, who is this person? And like, when did we invest with them? This is good problems. Like, I can't
Oh.
complain. And so we say, all right, this is enough of this. Let's build ourselves software, hired an engineer, and just build software for us to pull all of our data into one place. Again, mind you, we made money, but not enough where we had a family office or a team to help us managing our stuff,
Okay.
but enough to reach that level of complexity where you get documents and emails flowing in and out, you got cash flow going in and out, distributions, you have multiple bank accounts, K1s, a good problem to have, nightmare. And we'd speak with people, it's like, how do you deal with it? And some people say, we don't invest in more than one operator, so I have one portal. And this is crazy. This is a story I love telling because I was blown away that this even exists. But I was talking with this person who's like probably worth 20, 30 million. I'm asking, how do you manage your stuff? Or what do you do when you talk with your partner, your wife? And this guy tells me without blinking, yeah, I put sticky notes on my refrigerator where all my investors are at. I'm like, there's what? No way. I'm like, all right, we built this for us. And then while we did this, we built this software to pull data from everywhere, create like a single source of truth. A lot of our friends wanted it as well. And then we dove deep into this world of wealth management, financial services. And Going back to the diamond industry, we had no background in the diamond industry, but we managed to revolutionize the way diamonds are traded. And we're like, how hard could it be to do the same thing for the financial industry? It's a lot harder than we imagined, but it's feasible. And we just built a product, ended up raising some capital about 4.5 years ago from amazing angel investors and VCs, and built this product that evolved from this product that was just for us to be a product that other people can use. We launched Visor publicly 2.5 years ago, focus on the US market because that's where obviously the real estate is. The integrations to online accounts is easier. English is obviously easier to analyze. And I moved to the US 7 months ago to just be here local and push it from the US. Currently managing $18 billion of assets on our platform, thousands of different families across the US, predominantly in the private space. So I'd say 60, 70% of our average client's portfolio is in privates. It could be private equity and private debt. And the other 30, 40% is across public equities, public debt, and cash. I put crypto, by the way, in public equities. So that's the way I see it.
Okay. Yeah, but you can't I guess you can manage your crypto on Robinhood. So there are some public portals that allow you to manage it, but you can put the crypto on yours as well. And even the public kind of just keep track of everything. Maybe you can't trade from there, but just to have everything in one place. Is it working dashboard like across public and private, or describe how that relationship works?
So our objective is to try and become the ultimate virtual family office in a sense,
Mhm.
right? And what that means is a family office has multiple facets to it. One of those facets is the administrative side. Administrative sides mean the ability to pull data from everywhere, create that single source of truth. Because if you don't have that data, you can't really make great decisions. And so, if from the get go, we're saying we need to pull data from everywhere. So, publics, privates, and cash, insurance, everything in one place is what we're building towards. It does pull in all the Fidelity Robinhood accounts, all the breakdown of holdings and public equities and debt, all the insurance, term whole, and all that stuff, cash value, death benefit, including your privates. So we'll pull data from all the different private investor portals, from all the different your emails, whatever you need. The idea is to pull data from everywhere. Just if you had a family office, that's what they do for you. And then on the private side, when you get distributions and cash flow from either rental income or distributions or stuff like that, we analyze everything in your bank
Mhm.
and then reconcile the specific transactions to the specific assets so that the performance is updated automatically. Because I'm sure you've heard about this, but we're blown away by the amount of time this happens. When you invest with different operators, different funds, GPs, you'll get an email with a distribution update, but you might be surprised that you don't always receive the same amount in your bank account.
Mhm. Yes.
Sometimes the variance is very big. And then when you dive into that, funds make mistakes. You'll get an email saying this quarter you're getting a $10,000 distribution. We'll identify only 2,500. And then when we reach out to the client saying, hey, listen, there's a mess up here. They reach out to the fund and the fund says, oh shit, sorry, we made a mistake. We sent you the wrong email. And that happens a lot more than people imagine.
Yeah.
Anyway,
That happens to us sometimes. Like, that's why we do audits. Make sure that
right?
the correct distributions, we're sending the correct K-1s, and so we'll do periodic audits at least once a year, and sometimes we have to adjust things to kinda catch up, and so it's our job to catch that, but at the same time, I guess that's how you figure out who you can trust, right? If they're sending you good stuff or they're auditing or they're catching their own mistakes or not making mistakes. But you don't know that at the beginning. And especially at the beginning, I love what you said about how you're just writing kind of small checks to a lot of different people because when you're a new private investor, one, your net worth is hopefully lower than it will be in the future. And you need to be more diversified. The lower net worth you have, the more diversified you need to be. But it seems like sometimes it's the or I don't know if that's actually true, what I just said there. It's like the less money you can put into something to be truly diversified. Big check writers, the $10 million net worth can write big checks to a few people, and we can write small checks to a few people. But the more people we can write checks to and track, the more diversified.
I have to say, people tend to associate diversification with net worth or
Mhm.
net worth with sophistication. Case many times, but I don't know if most of the time. So what I
Yeah.
mean is the fact that someone has a high net worth number does not mean they're a sophisticated investor. And the fact that someone has a low net worth number doesn't mean they're a non-sophisticated investor.
Yep.
I had a call the other day with someone who's probably worth 40, 50 million. They just had an exit event 2 years ago and they've never invested in the private markets yet.
Had a
Like,
a full kind of
yeah, they had a windfall event. And so so they're not at that level of sophistication. So I think it's where you are at the game. I think when you're new to the game, you tend to be non-sophisticated. And when
Hmm.
you're non-sophisticated, you do things differently than when you become a sophisticated investor. And I think that's like where it changes. Because people also ask us, like, all right, what net worth do I need in order to use Visor? And we're like, it's not really dependent on net worth. It's how complicated your portfolio is. If it's not complicated, because you might be worth 100 million, but you don't have a complicated portfolio, you might not need a platform. It's a really interesting industry to dive into that we're learning a lot every day about it.
Yeah, and I think that complexity that you're talking about, though, is one of the things that turns investors off to private markets, even though we're talking about this a lot on the podcast lately about how public indexes tend to underperform private indexes, but there's no way to index in the private market because of that level of complexity and the inability to really get diversified enough to really index 'cause thousands and thousands, way more companies private, obviously, than public. So, do you have any thoughts on that ultra diversification that we're looking at, like, on the public side with index funds? Is that gonna be possible through technology someday to be able to track those a little bit better as individual investors and dive into that complexity without it being such a management nightmare?
So before diving, there are ways, but I think there, let's just say, two main reasons people don't diversify. Number one, usually when you want to diversify, sometimes you can't because the places you want to invest are extremely for people like you.
Mm,
You know, the requirements, qualified purchasers or more, the minimum tickets are high. Like you want to invest in Blackstone directly, you need to write a $25 million check or a $10 million check. So there's that. And then the second one, which people will not like to hear, is that people are lazy.
mm.
It's crazy. Like I'll talk to someone who will
Well,
go
I'm
and
good. I'm lazy, so I hear you.
nobody, but it's crazy. Like, here's the thing: people will spend hours, days finding the best flight, the best hotel rate,
Mm,
save a few $1,000s, right? But they won't spend the same amount of time understanding where they should invest their money
okay.
or managing that money that's invested because there's no immediate gratification like you would get from a trip. And so people just are lazy to go and try to understand, try to manage it. Like we mentioned this before, like people will invest with one single operator because they're lazy. Like they don't want to deal with it. And I understand why people don't, or I don't know if it's, and that might, I might be being too harsh. It's setting priorities. People might not prioritize their financial life as much as they would other aspects of their lives. And
Mhm.
so spending time investigating that versus spending time investigating something else, like spending time with your family. And I sometimes agree, like family time is probably more important than dealing with managing everything and finding the best alternatives to invest in and all that. So I just think those are two reasons why people do not diversify. Now, back to your question.
Yeah.
The first aspect of it, of accessing great opportunities, and there's a lot of vehicles and ways in the market to access these private market opportunities that are usually out of reach. And that's by investing in different fund of funds or feeder funds that are in the market. There are thousands of these different vehicles, many of them through a financial advisor, many of them is through just meeting friends of friends or other GPs and operators in the market that they don't bring the Blackstones necessarily, but they bring a multifamily complex where if you want to do it on your own, you had to spend time and effort or spend a lot of money in buying it, but you can do it just by diversifying, investing with someone else. When we got started 10 years ago, we bought two single family homes, two doors, and they were a complete shit show. It was a nightmare. And at the same time, we invested in a multifamily complex with an operator that we found and that's diversification as well, right? I diversified across 150 doors, writing the same check did when I wrote two doors, and I diversified. And so that's through these people that you can find to trust. So obviously the market has evolved like crazy to enable access to those types of opportunities. And on the larger side, there like we just brought a fund of funds that created the first index for the biggest private equity firms in the world. And those like Blackstones or KKRs or Apollos or Carlyles or all these big funds where usually you need to write a 10 to $25 million check.
Okay.
This company created a fund of funds where you can invest $1 million minimum. And we create our own SPV into them to enable $50,000, $100,000 minimum check to
Okay.
invest in this fund of funds. Anyway, it's like this joint partnership where we're creating access at a lower level to access the biggest private equity firms in the world.
Okay.
And so anyway, that's like the way to access it. And then on the priority side, Visor was built so that we don't have to spend time on aggregating data and managing all these different portals and logging into all these different ones and gathering K1s and distribution tracking and all that stuff. So that's on the logistics administrative side of creating an easier way to invest and track.
Okay. Yeah, that's actually pretty interesting to me because somebody's going to have to manage which of those companies are going to be in the index, how that's going to trade, and then still pretty high minimums. The first thing I hear when you talk about an indexing fund like that is, oh, good, finally somebody's doing it, right? This is going to start opening doors. But then the second thing I'm thinking is fee stacking. So you go into your fund, they have fees, it goes into their fund, which has fees, and then you go into the larger fund, which also has fees. How do you make the economics of something like that work?
That is such an important question. Fees can make or break any deal, right? It's so important. So, because this fund of funds, they come from the private markets, but they're new. So
Mm,
they're on their second fund, and they understand that in order to reach the market, they can't charge high fees because they need to partner with people like us.
yeah.
What they do is they take a 6% carry,
Okay.
which means I don't, do we need to dive into?
Yeah, you go ahead and define that because I think a lot of our listeners, we can assume they know what carried interest is. A lot of
So
people don't.
sorry, it's pretty. So the hedge fund or private equity model, you'll hear this a lot called the 220 model. And what that means is when you invest in these different funds, they'll take a annual management fee of 2% and then a 20% carry, which is basically a profit share on anything that is profits into that fund. So they'll charge a 2% management fee, and then every profit that remains, they'll split 80/20, 80% to the investor, 20% to the fund itself. And very common amongst like all large private equity and small private equity or hedge funds. In this case, they're taking 6% carry, so that 20% is 6, and they're not taking any management fee at all. And then we don't take any carry, we just take a small management fee, which is its base is 1%, but we discount that depending on the tier. Our highest tier doesn't pay any management fee
Mm,
in any SPP we put together. But anyways, so then essentially what happens is you invest into this fund of funds and you pay a management fee, which is very low, and a carry, which is very low. And that is stacked on top of whatever the underlying assets charge. And yeah, that's how it works. But still, the only alternative would be to invest a 10 to $25 million check directly. This is by far the cheapest option to reach those underlying assets
yeah.
at these check sizes. Like writing $100,000 check, any private bank or whatever is going to be a way more expensive than this at those check levels. So that's a really important question because there could be a lot of fee stacking here.
Yeah. And one thing that we say in our fund, we do mostly hard money. So, like I said, very niche, but occasionally we'll do a fund of funds for an equity deal because our investors need some appreciation and growth potential other than just compounding with the loan side. But they also need depreciation for taxes. And I do too. I'm a real estate professional. We need some depreciation, right? So we'll go in, and most of the things that we're doing, our investors could go in directly themselves. So our job is to negotiate a better deal for them than if they went direct. If you go through us, we can basically power through with $1 million check instead of a $50,000 check, and they're going to give us top tier economics. But if we can't do better than they could if they just went directly, then we're just like, just invest directly. There's no reason to have our fees stacked in the middle unless we can outperform.
Listen, and that is so important because there are these feeder funds or fund of funds who won't disclose who the underlying investment is
Mm,
because they don't want that person to go direct. I think exactly to your point, if you're creating that type of fund to fund model and you can't create more value for the investor to go through you, don't create the fund to fund model. We're just trying to create more value to our investors, right? Like lower minimums, pooled investments together gets better terms. If those things don't work, there's no reason to go with us. We don't get compensated by any of the underlying funds because we want to stay true to our investors, but also creating that added value is super important. And if you can't, you shouldn't do it.
yeah, but the reasons that you're talking about are things we don't really consider. Our $1 million check will get us better economics, but they could still write a $50,000 check. But in what you're talking about, it's more no, you have to write a 10 or $25 million check, or you can't play because you're not a qualified purchaser, which is like a level above accredited investor. And so that's a different type of motivation to go through a fund of funds model where they're not maybe getting you a better deal if you went direct on the economics, but the fact that you can even get in there at all is a win there. So you have to understand there are different reasons why somebody would want to do a fund to fund. In our model, it's purely better economics, but there are
Right.
other reasons as well.
No, so this specific fund of funds and the indexing the private markets is unique. We did other deals with conventional private equity firms like energy, oil, and gas, where the minimum ticket was 150 and the break point for an NAV discount was a million.
Okay.
And so we lowered the minimum to 50 and we reached more than a million in the pooled investments. And so they get better economics. Same thing, right? Different type of deal. But at the end of the day, the important aspect is each of them brings more value to the investor.
Yeah. For some reason, if you can't do something on your own, you need to team up with other people to get it done, whatever the team up would be. That's not really something I had thought about before, even though it's the same thing. It's like a bunch of people writing small checks so you can get the economics, whether it's getting into the fund at all of the larger check. And I notice that large funds tend to not outperform small stuff. They are more interested in boring, stable. So we're not wanting into these large funds because we're like, oh, Blackstone's going to beat the performance of this other. I find that tends to be the opposite. They have much higher expenses and they are going to do much less risky deals. They really are looking for boring consistency, plug and play. And especially when we're going after institutional capital on some of our larger deals, we hear that a lot. It's like the more similar deals that you've done, the better chance you have of attracting that investor of that institutional capital because they don't want anything new. They don't want anything weird. They just want to stay really boring. And so I think that the advantage that we're talking about of indexing it or even investing in these larger funds is not because they're going to make more money. It's because it's going to be less risk and tends to be a more stable, steady form of income. I agree,
Yeah,
disagree.
yeah. So here's the thing. I 100% agree. There's more money to be made with smaller operators because
Hmm.
they take more risk in smaller deals, which have more meat on the bone.
Yeah.
Bigger funds, these Blackstone and so forth, they're not competing with these smaller deals. They're competing with the S&P 500, with other indexes. And I think when you index the biggest private equity firms in the world, historically, their vintages outperform the S&P 500.
And that's what we want for.
Exactly. And so it's, I don't know, you can argue different or similar risk levels, but higher returns over time. That's what you're trying to achieve, I think, in those cases. Whereas if you're investing with smaller operators, you're taking a bit more risk, but also the upside is much higher.
Mhm.
And even when you look at, let's say, real estate space, multifamily, these big, even forget Blackstone, $1 billion operator is not going to go and buy a $4 billion multifamily deal. Usually. It's just too small. But there
Mhm.
might be so much meat on the bone of this multifamily from a value add perspective that when you look at it from a cash flow and IRR standpoint, it's amazing. But it's too small for these big operators to take on. And so usually the smaller ones will. And then it's just a catch 22. The smaller operators don't always have the most experience because the more experienced you are, the more you go upstream, but then you also lose the meat. Anyway, so it's a really interesting place to look at when you diversify and choose the operating company to invest with. That's why it always goes back for me to, I just want to invest with people I can trust.
Mhm. But that's where Visor kind of comes in because when we're talking about a truly diversified private portfolio, you just mentioned lots of things that people could go into. They can go into these larger private indexes, do fund to funds models, feeder funds, all of these things that you're doing, but they can also diversify into potentially higher reward. Higher risk is always in exchange for that. And usually the higher risk is because the operator, it doesn't rinse and repeat this kind of deal because those kind of deals tend to be a little bit more unique and customized. And so a platform where you can keep everything in there and you can say, okay, I do want to actually diversify into something that might be a little higher risk and high reward. But to be able to keep track of it all, because you don't want to overexpose to any of these things, but you want to make sure you have some exposure. Most of our investors or listeners to the show are not looking for home run big hits, but they understand slow and steady compounding types of things. So explain to us for somebody who's not yet a family office, how Visor can help them diversify more responsibly into different kinds of options.
Yeah. So it's important for you to clarify we don't actively manage money. So
Yes.
it's not like you're giving us money and we're diversifying it. Our
Correct.
core is to enable the management of that said diversification and to
Mhm.
make it a non-issue when you're thinking about where to invest. Because it's just wrong to make a decision of where to invest because of the logistic headache that's involved
Yeah.
with. And I think it's wrong to make decisions based on that. And so that's like where we enable diversification as a byproduct of lowering your administrative overhead when it comes to that. So, for example, when you invest with different operators, each of them has their own investor portal, right? Best
And even if you're using the same portal, very few of them have single sign-on. So you
uh,
could have multiple deals on the same portal with different operators, and you still have to log into each one individually. It's a kind of a nightmare.
yeah, honestly, I think that will become a commodity. Like Juniper Square, I think has it. Agora as well. I think a bunch of them have
Yeah,
you log
invest
into
as a
one.
single sign-on.
Yeah, so they might. I think, but still, there are like 40 companies in the market that offer fund platforms and administrative stuff. So, like by definition, the more you diversify, the higher the chance that these are going to use different portals.
Yes.
I don't want to log into these portals as an LP. I want everything to be pulled into one place. And so that's one of the reasons we built Visor. The second thing, I get an email. I CC Visor on every email I get so that it
Okay.
automatically reaches what we call our magic box, which analyzes, parses, and creates or updates assets. And so essentially, this is like my for all my financial stuff, right? To pull everything and analyze it for me so that diversification doesn't become a mess. And then obviously tax season comes around. Like I can invite my CPA into my portal and tell him, hey, listen, don't bother me anymore. Just go and take all the K1s, all the information you need. It's all there. Just leave me alone.
Yeah, if you have a good
Um,
CPA, they'll take it. If you have a bad CPA, they'll still send you a spreadsheet to fill out.
that's true. That gets me thinking. We need to create like a list of good CPAs that are easy to work with.
There's like, you have my QuickBooks login, you have my Visor login. Why do you keep sending me the spreadsheet?
Yeah. Essentially, what we can do is you can send a spreadsheet into Visor, and Visor will fill it out for you, right? That's
Mm.
awesome. Because we're adding so many aspects of like LLMs and AI into our product to make even more efficient, both for us from an operational standpoint, but also for our clients. We just did something cool. We did a webinar with a energy fund, which we had a lot of data around.
Mhm.
And then after the webinar, took all the materials, transcript of the webinar, the deck, the PPM, everything, and we taught our own LLM about this deal. And then we box that up so that people who are interested can just interact with an AI and just ask anything they want about this deal. And then they have this like just one source of truth. They can not just manage stuff, but also ask about deals they're considering or deals they've done or deals that other people have.
Yes. Okay. I've been making a lot more use of that with like deep research in the ChatGPT or Perplexity, where, for example, we upload our company PPM and I send it to our investors and I say, upload our PPM to whatever platform you're using and just ask it questions, do the deep research. And because are you going to read every word of this? And even if you did read every word of this, are you going to understand what it's saying? So those kind of tools are exciting. I do want to get more into that, like what you're most excited about, what you're working on, what's coming up, or something you just released. But first, tell me like the bread and butter feature of Visor, like your ideal customer and what they're gonna find that's gonna be like, what's an 80/20 rule? 80% of what they need to do, what is that Visor is offering?
Yeah. So the main aspect, our ideal customer is someone who has 10 private investments
Okay.
and more. That's just when it starts to become complex and email and cash flow. It just becomes more complicated in addition to everything else people have, right? And so that's our ideal customer. And then the core, I think the top two features are obviously aggregating data. One of
Mhm.
them is what we call VIP sync, which is syncing data from these private investor portals. No matter which portal it is, which fund you're on, we'll pull the data from it, all the documents and updates from it. And then, like I said, we back that up with the actual transactions in the bank to match that what they're reporting is actually happening. That's called VIP sync. Number two is what we call our magic box, which is again, from an aggregation and updating standpoint, pulling all data from emails, financial documents, balance sheets, P&Ls, and then creating and updating it on an ongoing basis. Because the biggest challenge when thinking about a platform like this is adding all my data to it and updating it because you don't want things to get out of whack and not be updated and represent what's actually happening in my life. So those are the two like core, I'd say. And there's a bunch of other aspects to the platform. The third one, which is just a derivative of all our aggregation of information, which is tapping into the data set that we have. So we currently track $18 billion of assets on our platform.
Mhm.
And we show that data anonymized and aggregated, but to everyone. So everyone can see how much money's tracked, how people allocate from an allocation perspective, and then in each asset class, which actual platforms, GPs, funds, managers, people are investing in. How much money has been invested into each of these people, each of these funds, how many investments have been made. And there's a lot of data behind that we're starting to also open up and creating more transparent investing world.
How would you compare it to something that most listeners can relate to, like budgeting software? So you got like Mint.com, Rocket Money, they have Plaid where they're talking to your banks securely back and forth. Like, is that a layman's variation of what you're doing? Or am I off track there?
No, I think it's perfect. Yeah. The comparison to these budgeting apps, Mint, Monarch, Rocket Money, Personal Capital to some extent, which was acquired now, Empower. These are all like budgeting apps with a net worth component to them. And they're great. Like these are great platforms until you reach that level of complexity. Then you have to have this plus a spreadsheet, a Dropbox folder, or a Google Drive. And again, I love spreadsheets. I'm a spreadsheet kind of guy, but they break as it becomes more and more complex. It's just, and I don't want to work at maintaining my passive investments. That's why they're passive. They don't want to become active investments. So again, these softwares are great softwares. They have a lot of great budgeting components and stuff like that. But once you wanted that overall holistic overview of understanding of net worth, including all the privates and performance tracking and document storing and analysis, and again, that next level, that's when you need something like Visor. And unfortunately, we're like the only ones in the market doing this because it is very hard to do.
Yeah. I can't even imagine the nightmare just getting the sign-ons.
Yeah.
Sorry about that.
How good? The
I
desk went up.
Yeah, okay, so I don't know if my editor is gonna cut this part out or not, but that's reality, right? Like, I keep bumping the button on my desk that makes it go higher and lower, and it's like one camera and the audio version, I'm hopefully not picking it up, but it's like real life happening in real time, and I'm like, "Where's the button to turn that off?"
Like whenever my kids like come next to the table, they're like they'll lean on it and then it goes up or down. It drives me crazy. Yeah.
Yeah, I know I have an off button, but I had to unplug everything because we have a different setup. We're doing an in-person podcast, so I plug it back in, I don't have any of my settings. I don't know. Maybe we should leave this part in because it's like how I feel managing my private investments where I'm like, where is this stuff? Because for a long time, we really focused hard on just investing in our own stuff as active investors. Because if you can make more money on the smaller investors or there's more meat on the bone, you're definitely going to outperform if you yourself are the active investor and you're having to share less with other people or other stuff. And so what we noticed is as we have diversified our own stuff away from our own businesses, and become more passive, it just turned into this absolute nightmare where you're just trying to figure out like, "Oh, I can't find the login for this." And I'll share like kind of an embarrassing example. There was a deal that we wanted to go into and they were asking if we could sponsor as well as passively invest. So I'm like, "Sweet, we're gonna GP, LP, this is awesome." And so we had 2 different portals, one for the GP side and one for the LP side. And I was always logging into the wrong one. I couldn't figure out what was going on. And it just was like one of those things where I just had to sit down and give it some attention to learn how to do it. But there's this learning curve and I was getting irritated because I didn't realize it was 2 different portals because it was the same company. And so we're waiting for our K1s. And I'm like, "Hey, I never got a K1 from this investment." And he's, "That's weird. Let's go back and look." And we looked and looked. I could never find the bank transaction for when I actually wired the money over because every time I logged in to try and wire the money, I was actually in the wrong portal. And then I get frustrated and be like, "Ah." And then I thought I did it, but I didn't. And so we never actually invested in that deal. And I didn't know until months, like a year later, when we're waiting for our tax documents.
That is a great story. That's crazy.
But that's the kind of stuff that this kind of platform, like, this is why we were like, "Okay, we've that one really, like, we've gotta get this cleaned up," because as we do more passive investing ourselves, it does I spend a lot of time on my active business, and I think you do need to manage passive investments. We wanna minimize that, though. We wanna make it as easy and central and pain-free as possible, and I remember talking to someone about 5 years ago when we first started dabbling around with, Visor. I was teaching a class actually, and somebody asked, like, "How do you manage all this?" And I started showing my spreadsheet, and somebody in the class said, "Have you looked at Visor yet?" And I was like, "No, what is this thing?" So we went and dove into it right there in the middle of the class, and I'm poking around like first look. I logged in, created the thing, start uploading stuff, and I was like, "Wow, this looks to be like a monumental task." But it has really helped as we dive into the features and actually started using it to stop making so many stupid mistakes. And it took us a long time. And we're still really, like I said, we still really haven't dived into it because we're lazy. Honestly, like just to be able to say everything's all in one place. And I think that's next on our checklist. Cause my husband one time came to me and he said, "How many houses do we own? Or how many, whatever?" And I was like,
Yep. These
"You
are
know,
good problems to have, right? I
yeah."
totally get.
I'm like, "Let me make a spreadsheet." And that, but I felt like that arrived when he came to me and he was like trying to do the taxes and he didn't know how many houses we owned. And I was like, we've made it. We've made it. So that's definitely a good problem to have. But you said something earlier on that kind of caught my attention about like good problems to have, bad problems to have. Being from Israel, a culture that is much more open, everybody knows a guy, right? And here in the United States, we don't even know this is even a thing, much less know a guy. I think that's like the 506B that kind of killed a couple generations of investors because you had to know a guy, right? Rich get richer type of thing. And so I feel like in Israeli culture, you talk about money a lot more often and it's more open. I have had some of my Israeli business partners say, like, "Why are you guys so weird about money?" I don't know. I grew up in a family that was very open about money, but I still would never go ask my neighbor, my friend's parents, like how much they made or what they were doing. Tell me about just financial education and the cultural acceptability of being able to discuss money and kind of compare and contrast what you've seen in your own life, like what the strengths and weaknesses are of just financial education through transparency.
Such an interesting question. I don't think I've ever been asked that before.
My job.
So I don't know if this is related or not. And it's not like in Israel, you think, oh, I'm so open to sharing how our financials with everyone. You don't think that way. It's only when you reach the US and you start to speak with people around here and you see how limited the openness is. And it connects to a characteristic, which I think is because the US is so big,
Mhm.
it's very region specific. But Israel is such a small country and everyone goes through a certain type of cycle in their life with high school, military, college, and entrepreneurship is a really big part of our culture. But there's also a type of communal brotherhood, camaraderie standpoint. And I think that brings a lot of openness and vulnerability to each other. Whereas there's a lot of individualistic aspects to the US and competitive in the culture, which it's not necessarily a bad thing. That's why the US has become a superpower, or one of the reasons, maybe. And yes, we're very open with each other. We trust each other a lot more. We're not competing with each other. And that maybe helps us be more open about it. And also the risk taking profile that we have is also a bit different. So like when you have some money, you ask your friends, which is not always a good thing to do, right? You want to talk with a professional, but you ask your friends. And then because of that risk, oh, there's also another really important thing in Israel. Retirement 401k equivalent is mandatory. Like
Oh,
everyone in Israel must, when you work somewhere, you must have a retirement account. You don't ask if you want it. You have to. And so you have this feeling, this notion, whereas you have some excess capital, you don't think about your retirement. You think about how do I make this multiply? And so you dive into the rabbit hole of, all right, how do I do that? What risks can I take to multiply this cash? And real estate is a good way to do that. And there's also other ways to do it. But I don't know if that answers your question directly, but I think when you think about the differences of culture, that's maybe one of the reasons that exists.
yeah. I wish when my kids were talking to our neighbors or something that, because this is one of my colleagues, he said, when I was a kid, I would just ask my neighbor, like, that's a nice car. How much did it cost? And he would tell me. And now I knew a nice car cost $27,000 back then, and that a not nice car costs $5,000. So when I'm thinking ahead to myself, what car do I want to plan for? Like now I have a general idea, and you can get car prices off the internet, right? So that might not be non-starter, right? But there are just so many types of things that we just don't talk about. And I think that competition aspect of it really speaks to it because if we are looking to be successful, but we can drive the car, we can have the mortgage, right? But nobody knows we're living paycheck to paycheck because we have these outward things of consumption and nobody's going to ask us, how much do you actually make to be able to afford that house or to afford that car? What's in your emergency fund? How much do you have in the bank? We don't talk about that kind of stuff.
We don't talk about that in Israel either.
Yeah.
People
So
don't go.
where do you draw the line? Like how much is private and how much is like any kid could come up and ask you and you'd answer truthfully?
I think it'll be weird in Israel if a kid comes up to you and asks you all those questions as well. It'd be weird, but the idea of investing is pretty open. Hey, I want to invest in this. Do you have any ideas? Or I have some money aside. I'm thinking to invest. That is very common among adults. Kids, not as much, but it is pretty common because why not? It's just not even something that goes my mind. Like, why not? I have $50,000, $100,000 aside. Where would you put it?
Yeah.
Uh,
Yeah. My circle does that now, but we had to trade we had to like trade circles. Really, like before I got into investing, it wasn't something that we talked about. If
yeah.
you told somebody even how much was in your 401k, that was like bestie friends kind of thing and very vulnerable. And we just
Interesting.
didn't talk about it. Yeah. I don't know. It's a super private thing. It's like going to the bathroom, right? We know everybody does it, but nobody's sharing, right?
Yeah, you went really far, but yeah.
Yeah. It's just one of those things where it's like, why didn't I know, like, when I'm managing my investments and people are like, how do you manage all these? I'm like, let me show you my spreadsheet. It's just the act of somebody saying, have you checked out visor.com? Like just hanging around with people who talk about this kind of stuff. It changed the trajectory of where I was like, oh, I can actually get a lot more diversified. That was like the moment where I was like, wait a second, there's a management tool for this. So I don't have to have so much money in one place and I can start to diversify. And it really opened my eyes to say, this doesn't have to be a management nightmare. I can practice what I preach. I can eat my own dog food and say, you need to be diversified. I am too. And here are the tools that I use to manage this. So I think that aspect of it is really interesting for base level investors. But you also said something that caught my attention. You want to be a virtual family office. So define family office, first of all, as you see it, and how Visor can help families break into that level. Because the first time I heard about family office, I didn't really know what it was, but my attorney manages a lot of family offices. And he said, families should think about starting family office when their family net worth is $100 million. I was like, what? Like, I really like, and so I've noticed that technology seems to be lowering the bar for some of these things because it lowers the costs associated. You don't have to have a full-time lawyer, full-time manager, full-time this, full-time that. You can use these kinds of tools. So do you see that you're lowering the bar for families to be able to start family offices, or what does that mean to you, virtual family office?
That is such an important question because a family office means entirely different things to different people. It's really important to set the line as how I see it.
Or how the US government defines it from a tax standpoint.
I don't think the US government defines a family office. So
Yeah.
family offices are built, this started like multi-billionaires. I think the Rothschild or one of those like first original multi-billion dollars, multi-generation families, they built a team. And that team helps manage every aspect of the broader family's financial life, including other non-financial aspects of it. What that means is they'll deal with the administrative side of the family, the financial, non-financial, the legal side of the family, the philanthropy, the succession planning. Sometimes they'll do with obviously investment deployment and investment management and even travel. So there's all these other aspects that a family office takes care of depending at the level. Essentially, a family office takes care of all aspects of a family's life, both today and planning for the future. These were built for the multi-billion dollar families. And then as it grew, smaller families established teams, and then multi-family offices were established. Basically, you leverage one team to serve multiple families, 20 to 50 families, giving the same types of services a single family office would provide to the family. Now, a lot of the components that a family office provides cannot be automated yet, but a lot can be automated. And so when we start, we want to build the largest multi-family office. We say, all right, what are the components of a family office? There's the administrative aspects of it, legal, philanthropy, investment management, all that.
Mhm.
We started from the admin side and the financial admin side, which is pulling data in, creating a single source of truth. The second side, which we're starting to address, which is, all right, we're helping them track and manage. Now let's also help them deploy because we have such a large data set. We can tap into great opportunities.
Right.
Then there's more down the road, the legal, the philanthropy, succession, and all the other stuff to which we want to implement down the road as well to become this ultimate family office in a sense. But it's a long-term vision. It's very ambitious. We're still focusing on being established in the first two components I mentioned.
Yeah. I think it's interesting because you were talking about when clarification, like you're not actually managing or deploying money. You're not the family office. So I guess we can define family office like the family who sets that up versus the support services who provide those family office. As the SEC has like certain rules about what type of support service can be considered a family office. But I feel like you're not providing those support services. You're not a family office services provider, but you're paving the way for families to maybe self-manage that a little bit in the meantime. Or like, how does that help in the short? What's the short term versus the long term vision there?
Again, when you build a family office, you have an analyst, you have a manager
Mhm.
who creates your single source of truth, right? Pulls everything and creates that spreadsheet report of where you are today. That's what we do. So that's like a component of what a family office would do.
Yeah.
We do as a software service, like a SaaS product. The deploying aspect of it, we're starting to dive into. It doesn't mean we won't have partners or we don't have partners who do it on their own from the tactical side of trading.
Mhm.
But here, when you go all the way downstream, you talk about financial advisors. A financial advisor is a component within a family office as well. They
Mhm.
don't do everything else. All they do is manage a public portfolio, right? If you blend them together with an assistant and then a lawyer, then you're basically building a family office. And that's like when you have all the components together, then it's a family office. We don't have all the components together yet. We're
Okay.
building towards that. But the idea is to become one.
Okay.
Exactly.
Yeah. So multiple families can come in and use the same service
Exactly.
providers. Yeah.
Exactly.
That's really interesting because I find that kind of what we were talking about before with the money culture and being able to talk openly about money, that wealthy families have to make this a priority if they really do want to create legacy wealth, because you got to make sure that the kids are not just going to go in and ruin it. When they take over, they have good people, executors, and you even mentioned life insurance policies, like the family bank, where someone passes away and that money goes to the family office so that they can invest it for the good of the group and those types of things. It's a very different way of managing money than most of us are familiar with. And so I feel like your tool is almost paving the way for families to be able to get in there again, a lower barrier of entry
Exactly.
than these multi-billion Rothschilds, Vanderbilt type of people.
Exactly.
Yeah.
That's what it's again, like I mentioned at the beginning, it's ambitious. but we're trying to stay true to this vision.
Yeah, it's a great mission. And I feel like even where we are with our net worth, we're nowhere near being able to think about that kind of stuff. It's like I can start thinking about a family office because of tools that exist like this. It makes me excited because I feel like we're really changing our generational wealth and our legacy wealth for our own family in a way that would be unimaginable even 10 years ago to be able to afford access to. And we still need to get an accountant. We still need to pay for an attorney. It's not like you're replacing all of those things, but some of the management stuff that we can take in house and lower costs on. I just think it's a great thing. You guys are on a great mission and it's benefiting me. And I want to get the word out there because, again, we want to eat our own dog food. Like we're diversified. We only do this very narrow thing for our investors. And we are constantly talking about diversification and making sure that you have professional tools. Your advisor telling you to only stay in public markets, yeah, then you need to get a new one. If your CPA doesn't understand anything about real estate, you need to get a new one. And so being able to have a tool like this where you can be more empowered and taking over your own decision-making process and being a better consumer of those professional opinions, super important. Anything else that you want to tell us about yourself or advisor? Any questions I didn't ask that you would really like the audience to know?
No, this has been great. I love talking about you. You asked some really great questions, and thanks for having me on the show.
Yeah, appreciate it. How can people get a hold of you and how can people find the product itself? But if they want to talk to you specifically, how?
Yes, I'm pretty active on social media, Litan, Yahav, Visor. So happy to chat. Anyone interested in just Visor in general or passive investing in particular, I love talking about this type of stuff.
Yeah, I did think of one more question. I was wondering this back when I very first signed up, the spelling Vyzer. I'm like, there's got to be a story behind because it's like an advisor or it was like a visor protecting. Like,
Both,
where did
both.
that come from?
It's a bad name and bad spelling,
Oh,
right? It just stuck, and so we just left it as is because I just don't believe it's that important. But it was both an advisor and visors to protect you. Yeah, that was the
okay.
thought behind it.
Okay. So both of those, I was not completely off base there because I think both images actually really do encapsulate, what you're.
Right.
So it's a good name, but I think it's maybe people are typing the wrong thing into the browser. Maybe that's bad. But
Yeah,
all right,
for
awesome.
sure.
Thank you so much for coming and just educating me, educating the audience, and really opening up possibilities of people being able to manage their diversified private portfolios as easily or becoming as easily as they manage their public ones. So if you out there are listening and you want to invest with us or you want to just chat with me about any of this kind of stuff, you can get a hold of me easily at investwithemma.com. And that's a free 30 minutes on my calendar. We can talk about whatever you want to talk about. I'm not a professional advisor, but I can tell you what we've done, what's worked for us. And I can make some introductions to any of the guests that we've had on the show or anybody I know in the industry that has some sort of way to solve a problem that you're struggling with. So appreciate you listening. Be sure to reach out. Networking is how we do all of this. And I'm looking forward to hearing about your next passive income adventure.